Hi Emily, thanks for joining me this morning. How are you?
I'm very good. Thanks for having me on, Mark.
So we're planning to talk a little bit this morning about valuations,
Yes.
which is obviously a really practical topic. So there's a few aspects to cover off here in terms of the process of how that valuation happens and what we can do as investors to, I don't know if influence it is the right word, but certainly,
Guide
put
it.
our best foot forwards. Taking properties that are potentially run down, or we're taking properties that we can turn from one thing into another thing to add value to it.
Yeah.
But before we do that, we need to understand whether or not there's enough uplift in the value. So
Yeah.
how do you go about getting to that figure?
So, I mean, the big word that you'll hear on this is comparables.
Yeah.
And you're right in saying it's pretty much the first thing you do, because we as investors, yes, there's always some risk, but we minimize that risk greatly by investing in stuff we have evidence for.
Yeah.
And those are the comparables for what has sold in that area previously. So we can't go on the word of, this property has been sold, it's not yet completed because it could fall through and all that stuff. We're talking about real evidence of something sold, ideally in the last 6 months, ideally within about quarter of a mile.
Yeah.
And if you can have 2+ comparables, you're going to be in the best position when it
Yeah.
comes to going, I know, pretty guaranteed, I know that this property is a like for like, something done up, something the same layout, ideally the same square footage, ideally.
Yeah.
If I have 2+ comparables on that, I mean, I'm as 99% sure as I'm going to be that that's what the value of my property can be worth. So
Yeah.
there's no guesswork. There's
Yeah.
no hope value.
Yeah.
It's black and white essentially. So when I'm starting out looking at, whether it's an area I know well or whether I'm first doing my initial research, that is entirely the place that we start at. And I go on Rightmove. I like Rightmove better than Zoopla for this task. I find it's a little
Yeah.
easier to navigate. And using Rightmove to go and have a look at those past sales in that postcode area, you can get really quite specific, and you can look at past listings, you can look at past floor plans. And, the big question always appears from students is, what happens if you can't find a comparable?
Yeah.
Because in the ideal world, you've got a street where a bunch of houses are very similar and you've got 2+
Yeah.
comparables. But what happens when there's literally nothing within quarter of a mile, half a mile?
Yeah.
Is that something that you then, if you're looking at, let's say, a flat, someone's done a conversion of a house into 2 flats and it's the only flat in that area for a mile or two, do you
Yeah.
have the confidence that you know what that is going to be worth when someone else essentially takes their opinion on later
Yeah.
down the line?
Yeah. Yeah. So what do we do in that situation? So like you said, it's important to compare apples with apples
Mhm.
and try and get something that's as similar. There's no point, if you're doing a 2-bed terrace, comparing it to a 4-bed detached, it's
Mhm.
not a direct comparable. So you need to try and find something that's going to match up. And we're obviously looking for done up examples now. So when you're
Yes.
doing that Rightmove search, it's looking at if they've got photos attached to the listing, can you find something that is done up to a reasonable standard? But I know it's certainly happened to us in the
Mhm.
past that sometimes there just is very little on Rightmove for whatever reason.
Mhm.
Maybe your project is particularly bespoke in a way. Maybe it's maybe there's just the market in that area. There's just not been a lot of movement. So what's your backup plan in that instance
Mm.
if you've not got data that immediately jumps out on the screen?
Yeah. So I think my first step will be, generally speaking, with an agent
Yeah.
who knows the area really well, and ideally you have a really good relationship with,
Yeah.
because if you go as a homeowner, like, the agent's job is to sell
Yeah.
their service, which is, I
Yeah.
want to sell your home for you, so I'm going to try and give
Yeah.
you a really favorable report.
Yeah.
And therefore I tend to have good contacts in the area who knows exactly what I
Yeah.
do, knows
Yeah.
that I'm not looking for, I obviously want to get as high value as I possibly can, but I
Yeah.
want to be realistic.
Yeah.
And so, so I spend time early stages explaining to those estate agents what I do, show them examples of what I've done in the past, and they start to then really understand. And so I will ask for agents, because sometimes they have access through their pay, the fact that they pay for all those services. They sometimes get more
Yeah.
data available to them,
Yeah.
and they may have, well, had an instruction previously on something very similar, or and maybe even have had a surveyor look at a property before. So I like to start with the agents, but you do have to just understand what the agents, if you've never spoken to that agent before, what
What
they're
their
trying to do.
motives are. Yeah,
Yeah.
yeah, exactly. So if it's I know if I'm speaking to an agent that I don't potentially I've either not worked with before, I don't
Mhm.
have that relationship with, I'm probably going to knock 10% off what they tell me straight
Yeah.
off the bat, just because I know that they're pitching for potential.
Mhm.
We know we're not necessarily looking to sell, but they're looking for that sort of commission off the sale and looking
Exactly.
to draw you in as a customer. So um, best to err on the side of caution, I think, isn't it? And that probably
Absolutely.
applies generally, I think, to working out
Mhm.
your end value is not to be too punchy. We
Mhm.
all like to think that our property is going to be the best in the street and what have you, and I'm sure it will be. But if you're only getting into a deal
Mhm.
based on a really punchy estimate on done up value, then you're not giving yourself any room for maneuver. I prefer, I'm
Yeah.
sure you're probably the same, I prefer to be conservative. And then if I get a higher valuation, obviously we're quids in, as it were.
I think if you get to the point where it's just such a unique property and nobody can give you a firm answer and the valuations are all over the place, you've got to make that decision
Yeah,
at the get-go whether that type of property in that area is just too risky
yeah,
because you don't know what that end value is going to be.
yeah, yeah. And we call it a cookie cutter process for a reason, don't we? In the
Mhm.
sense that, the best scenario is that moving forwards, you start to generate your own comparables.
Exactly.
If you're operating within a patch within an area, and you've had projects go through and you've had them valued, the whole process, you really gain momentum because the whole process becomes so much more straightforward. So when you've got your own examples, well, I know exactly what this is going to be worth because I did one 6 months ago in the
Mhm.
2 streets down that was exactly the same model. And it gives you a lot more confidence, I guess, to get into deals.
Absolutely.
And we talk
Absolutely.
about momentum being a real genuine thing. And I genuinely believe that. I've got plenty of evidence of that in our own story, and you just see
Mhm.
it every single day. The number of times that I've seen investors, really grafting to get their first deal across the line, and then 2 weeks later they get two more. And it's largely because of things like that, isn't it? It's the
Mhm.
relationships that you build, like you said, with the agents, but it's also about the confidence that, hey, this works. I now know what I'm working with. I now know what I can afford to pay, what I can afford to spend on the refurb, and what it's going to be worth. And then
Mhm.
you just start to roll out that cookie cutter model. So what is the process? Well, first and foremost, let's cover off the most obvious thing. We always meet the value at the property, right?
I think
Right.
it starts before that, Mark. So if you go back to when you're going to speak to your broker
Yeah.
and you're letting them know how much you think that property's
Yeah.
worth, so how
True.
much
Yeah.
mortgage. So
Yeah. Yeah.
it starts quite early on,
Yeah.
and therefore when your broker is going to get you your mortgage illustration and put in that application, they are writing down that number,
Yeah.
and that number gets passed
Yeah.
essentially to the surveyor at some point.
Yeah.
So you have to be aware of what it is that you're asking for
Yeah.
very early on because it can be
Yeah.
quite difficult to suddenly change that number
Yeah.
later down the line.
Yeah. No, that's quite
And
right.
I don't know about you, Mark, but I always ask for more than I want.
Always. Yeah. Always. I
Yeah,
do. I do absolutely always ask for more than
yeah,
you
yeah,
need, if that
yeah.
makes sense.
And making sure that it does work with your cash flow as well.
Yeah.
There's no point going and asking for too much and
Yeah.
then it ruining your cash flow down the line. So it's a happy
Exactly. Yeah.
balance
Yeah.
because if you ask for too much, of course they're going to say that's not worth that and take it
Yeah.
down.
Yeah.
But you never know.
Yeah.
And if you ask for exactly what you want, again, you're on that knife edge of what
Yeah.
happens if they just
Yeah.
disagree, even
Yeah.
by 1,000, 2,000 pounds. For example, for flats that we are buying, the done up value for those tends to be around 60 to 70, somewhere
Yeah.
around there. And I
Right.
tend to ask for about £5,000 more,
Yeah.
about, you know. And that usually, if they're going to pull it down at all, and they haven't necessarily done that, it
Yeah.
will generally not be by a huge amount,
Yeah.
£2,000, £3,000 maximum.
So meeting the valuer on site,
Hmm.
so that you can obviously give them a tour of the property, talk them through the work that you've done, but
Yeah.
it's an important tool to have in your tool bag, that the valuation pack, isn't it? So there
Yeah.
are ways that whether or not you can actually influence the valuation. No valuer is ever going to admit to being influenced, I guess.
Hmm. Hmm.
But there are ways that we can present the property in the best way, but also actually
Absolutely.
make sure that you're putting it front and center, literally showing them how
Hmm.
you've added value to the property.
Exactly.
So what would
Exactly.
you typically involve in a valuation pack? So it's a pack of information that we give
Hmm.
to the valuer when they arrive for the viewing.
Yeah.
What would you typically include in that?
So one of the most important parts, but also might be very overlooked by the value at the same point, is the comparables.
Yeah,
Because of course, the surveyor can go and access the exact same
yeah,
information you have. I'm not teaching him how to suck eggs here.
yeah,
He's a professional. That's what he's
yeah,
paid to do.
yeah,
However, sometimes I may have access to some other information that isn't like my, as you said, my own valuations.
yeah,
And or in Scotland, obviously, we have home reports, and
yeah,
so I may well bring up a home report for a property that is on the market because we've
yeah,
got an actual valuation there. So I do put that in.
yeah,
Um, some surveyors just do not like the fact that you're handing them something.
yeah,
So for me, the comparable is an important part. If there's something that's new, if there's something that if he couldn't see exactly on Rightmove straight away,
yeah,
um, so that comparable part's important. But I also then think, what is it that I can tell that surveyor that they don't know? And
mm,
what they don't know is sometimes the story about why you acquired it for so cheap,
yeah,
because sometimes surveyors can question that.
yeah,
So I show them the condition of the property it was in when I bought it, because especially if it's off market, they didn't see why did
yeah,
you buy it for such a cheap price.
yeah,
And if you can show them the photos of this was a mess before,
yeah,
and also importantly, how much you spent on the property doing that refurb and what you did.
yeah.
And that's the information that they don't necessarily have access to. And that completes a bit of the story for them.
I think sometimes as well, I've had it before where they'll stuff it in the back pocket or
Mm.
they'll stash it away somewhere. But, I'm pretty certain that if you were to walk past them sat in their parked car afterwards, they'll be flicking through it. And,
Yeah.
at the end of the day, it's sort of, you're doing some of the work for them and,
Hmm.
you're sort of guiding them, I guess, to where you want them to look in terms of
Yeah.
the best possible comparables in the
Yeah.
area. Do you include the number? Do you actually put the figure in that you're looking for into your
Yes.
valuation pack? Yeah,
First page.
front and center. Yeah, yeah,
Yeah.
absolutely. Yeah,
First page, there's a summary. I do say what I bought it for and why, but
yeah,
one of the main figures there is what we're looking for refinance on.
yeah,
They all will already know that because that's what we asked for the mortgage.
yeah,
But it is there as well, and I put rental figure in there.
yeah,
So I've
yeah,
got a
yeah,
document of all the refurb costs, and I would basically link in the PDF to a Dropbox link all the certificates, or any requirements of stuff you wanted to see for that. So um, you always need to find a way to try to get that in front of them, and
yeah. Yeah, and
so
it's adding a level of professionalism because at the end of the day, when you start to scale up and do potentially
mm,
bigger commercial deals, for example, so it's a hot topic for us. I'm working on this right now. Is that your valuation pack, which
mhm,
now becomes a business plan, it's
yeah,
a little bit more significant, is a prerequisite. Like the valuer is saying, send me that in advance, please.
exactly,
You need to send me that information because there's a good chance that depending on the project, a good chunk of that valuation is going to be based on the performance of the business and the
mhm,
income that's generated by that property alongside just its bricks and mortar valuation now that you've done a nice
yeah,
job refurbishing it. So
yeah,
that when you get to that stage,
mm,
having a professional business proposal
yeah,
about the value of the property, both in terms of income and capital value, is expected. And it's just
exactly,
bringing that down into the residential market, isn't it?
yeah.
Really?
And
Yeah.
and at the end of the day, here's a question: what happens if that valuation is considerably lower than you were
So this was
expecting?
going to be my next question. So I guess the last piece in the puzzle is down valuations. So we
Mhm,
hear that term bounded around, and it creates a lot of fear in the sort of investment community, particularly during different market cycles. Or there's a
mhm.
lot of down valuations going on at the moment. So what's your take on that? Down valuations. How do they happen? How do we guard against it? And I guess how do we respond to it when it
Yeah.
happens?
So in terms of real down valuations, I have never personally had a down valuation. In terms of the valuation is considerably lower
Yeah.
than you expect. And I I don't know whether some of the COVID period of down valuations was nervousness. You know, we kind of we always went on our very strong comparables. So as you were
Yeah.
saying earlier, I'm not hoping to be above. I'm not hoping it's dependent on
Yeah.
the market. I always have proof. We have had valuation come back. So basically, we had two properties that these two we were talking about earlier that we valued at the same time.
Yeah.
Going on to the same mortgage company, but the mortgage company basically had two different valuers come out and
Right.
value, and they were about 100 meters away from each other,
Yeah.
frustratingly.
Yeah.
But anyway, it worked out. It worked out okay because the first one we got valued. We put in our top valuation, came back as that top valuation bonus. Wasn't expecting quite that, but
Yeah.
perfect. The next one came back at 5k less. So that was our real number.
Yeah.
And so we kind of thought, well, okay, what's the options here? And we have the opportunity to appeal.
Yeah.
Now, our broker was pretty like, you can try, but I don't,
Yeah.
you know, what are you going to lose? But I don't really see you're going to get it. Ultimately, we would have accepted that original valuation.
Yeah.
We put in the appeal, and during the time that we put in our first property, we went through the first one, there was actually another property appeared on the sold listings. So we found a stronger valuation, and we actually got that full valuation. Broker was surprised, but you know they
Yeah.
had to go with it because it was there. And you know, if that hadn't happened, I would have gone back to the estate agent and just said, look, do you have any, you know, confirmation of
Yeah.
anything going through? So that is a process you can appeal. But I do know that if you've been downvalued quite significantly, unless you've got very strong evidence to say why that down valuation is wrong, then you potentially have to go for a new lender.
Yeah.
And I think, you know, the risk is that the same valuer is on that panel.
Yeah.
But you know, you can have that conversation with your broker, and you potentially, yes, you do have to possibly pay another broker fee, or at least some fee towards that process.
Arrangement fee or something. Yeah.
Yeah, if it's drastically bad, there will be another option and another valuation basically to be able to go and look at as an option.
One of the most important things in this sort of revaluation process and putting your pack together and everything else is having confidence in your research, having confidence in your data, and having confidence in the work that you've done to the property. Not sort of blind faith, not something that's completely unrealistic, but having confidence. So yes, by all means, get input from your broker around the valuation, but don't be fully guided by the broker.
You know, if you look at it from the human point of view, they're putting their reputation on that and predicting housing markets, and you know they can't be seen to be pushing stuff too ridiculously.
Yeah.
They've got to show their comparables. I think a lot of that uncertainty right now has disappeared. Obviously, there's chat about interest rates and you know, when's the next recession and all that kind of stuff. But for now, surveyors just have to crack on with knowing what does the market look right now, and they're not the ones predicting what's going to happen. So it really just, as you said, comes down to the confidence in your own product, your own comparables, your own confidence. And once you get a process and once you get your cookie cutter done, you just repeat it. And, you know, hopefully over time, those valuations, if it's in a capital growth area, those start to go up and the rents start to go up and over time.
So hopefully people find that useful. So thanks as always for your invaluable input into that, and best of luck with all of your projects that you've got going on.
Lovely. Thank you, Mark. You too. Looking forward to them.
Excellent. I'll speak to you again soon.